And now I am going to turn it over to Carter Williams for our next conversation, which is investing in health, food and health, challenges and opportunities. You're going to do the joining you?
Joining me? I can do it.
Okay,
I can start.
You are the moderator, I'm turning it over to you.
I'll be moderator.
And we, I'm going to have them change your time to 30 minutes.
30 minutes?
Yeah, 30 minutes because
we can do this in 15
we
minutes.
Are going to start, we're going to start lunch right at noon.
Okay, so, and we need questions from the audience, and we're getting people mic'd up here, but Matt Crisp, Sanjeev, and David Lee are going to be joining us. And we have all been right at the center of recent investments. I met Matt in 2014, and we invested in him when he was at a $14 million valuation. And when are you going public? Can we say that out loud?
A week from tomorrow.
A week from tomorrow.
Ish.
Maybe. By the end of the quarter. That's what's on record.
It's like watching the vaccine manufacturers come out. But so we've been through the cycle. Everybody here has been through the cycle recently. We are setting up this conference because we're all moving these companies to public markets. When I started today's conversation, I mentioned that that we've had professional investors, long-term investors, reach out to us and make the analogies back to the internet market as far back as the 80s in terms of what's going on. And so all of us are on the board of Benson in one way or the other. And during COVID, we went both through a Series C that almost had some challenges at the beginning of COVID, and then taking a company public. So I think all of us have aged about 3 years or 4 years in that process, 10 years, depending on what's going on. So we've been right in the middle of this. The advantage as investors and technologists in this is we're meeting a lot of people every day that are explaining how they're using protein, how products are entering the market, and we're seeing some of the early stages, and we're all pretty excited about what we see because we see a lot of opportunity. But we're not quite sure what the valuation should be and what's going on with the innovation to come. And so this is the opportunity to have that conversation. This panel was talked about arbitrage. It is about innovation and challenges. And so that's what we're here to talk about. Anybody have any questions on that? So Sanjeev, I want to start with you in that you sent me an email recently making a comparison of what's going on now to energy transition. You want to highlight that?
Yeah, I mean, we're spending a lot of time in the public market world just trying to understand how that story gets underwritten as more and more of our companies look to tap the capital markets. And one of the things that we've seen or observed is $4 trillion has gone into sort of the energy transition from 2004 to 2020. That story.
$4 trillion of investment?
Yep.
It's a big number.
And in the plumbing system there has been fairly built up between private and public and even fixed income. And I think one of the things that we're seeing folks like come to us, large capital market providers and multi-asset managers, is like, we got energy transition. Now we want to look at food transition. Most of them have energy teams. Very few of them have built a food and ag team, but they're looking to build those teams, looking to invest. I was with a manager last night. They have about $80 billion in management, and they just hired a team to do food and ag transition. So this is coming, in our view. We're getting inbound interest to sort of, the heuristics, though, of food transition is going to be very different than energy.
How so?
There's not a 30-year PPA and an infrastructure asset to go back. It's much more, they're a bit, sort of, they're trying to understand the market dynamics, the market structure, the growth. But I will tell you, there's latent demand, and then you pair this with what happened.
Latent demand from an investor standpoint.
That's what
to
we're
move
seeing.
capital to this market. Is that ESG driven, or is that?
I think some of that is
technology
ESG.
driven, or my Gen Zers is telling me I got to change my diet driven.
All three. I think consumer, the flows into ESG, and I think what's happening is the minimum revenue keeps coming down to go public, is what I've noted in the last month or two. Even though we've had massive volatility in capital markets, the last 3 or 4 months, there's still a large desire. And so as folks build some relative scale, I think the market is waiting, and in fact, we're even telling some bankers from what we've learned in the de-SPAC world, they're too early. Like, don't talk to them yet. Wait a couple years, and then they're ready. But there seems to be a lot of
Capital that wants to move in earlier than we've got sort of capital markets fit.
Yeah.
Yeah. And so you guys are both going public now.
He's already public.
That's all right. That's correct.
I enjoyed the blessings, curses of it.
Yeah. So you,
Full spectrum.
the theoretical notion of going public is to reduce the cost of capital and expand. Notionally, that when we think about Benson Hill, is Benson Hill ready to dominate the plant-based protein market and launch, and let's go get that kind of capital. So David, you went public.
We listed under our own ticker in February. Started the process. I think we announced a SPAC merger just a few months prior. And we have gone through 2 quarters as a public company, had our first product be produced and sold, have reset guidance, and I think we've gone through the full gamut that you typically, I used to do large public company turnarounds, right? The Best Buy turnaround, Zynga,
Yeah.
Del Monte. The pace with which change is happening now is much faster. And being public now is different.
Well, so you went in, you had your OIR team, you were going to go public, you were figuring this all out, this is what our message was going to be, you hit the public markets, other things are going on, you're in the middle of COVID. What did you learn in that process that you wish you maybe had done differently in terms of helping the investors understand your value proposition?
Well, I think maybe less relevant just to AppHarvest, but maybe more applicable to everybody in the room, is that we're in an infrastructure-heavy, capital-intensive business. You heard the equity analysts talk to you about that. But the unique aspect of food is that adoption is local. Food is ubiquitous. There's a ready demand on the other side of anyone who's interested in controlled environment ag, frankly, here in the US, or I would argue the same for plant-based. When I was at Impossible, struggling to get ADM and Cargill and many others to provide my needs in soy, it's because even that industry is primarily geared towards large commodity animal feed. And yet, the consumer is moving to plant-based, and the product doesn't have any innovation. So I think the broader lesson, if you want to talk about being public, is on the one hand, your cost of capital and your access to it arguably earlier. One could say that the SPAC phenomenon is in a new phase. Was very attractive for those of us that need to get to scale to create affordability. On the other hand, it's been 6 years prior to taking the role at AppHarvest that I was running public companies. Being public is different. The social media phenomenon is a curse and a blessing. The whole Reddit meme phenomenon is very real. And the kind of populist notion that anyone can have a right to make or break a company is different today than I think when we were all, some of us, at public companies prior. So you need to go into it with open eyes. But the fundamentals of the decision are cost of capital and can you deliver against public company scrutiny and expectations for the mid to long term.
And so that's enough of a negative pressure to maybe have caused you to think differently about it? I mean, would you go to the junk bond market, or
Listen, I have no regrets for what we did at AppHarvest. You'll hear me present it. I really believe that getting to scale is not just important for those of us who want the mission of sustainable food. I think it's important for the hard unit economics we need to give superior return. And I'm equally motivated by both. I think the question for me is less for the audience about what we did, because that was yesteryear, right? It's more today, if you are investing or advising or operating in this space in food, I think the question has changed. I think the capital markets have changed, and you're seeing more interest, arguably, in the private capital markets for infrastructure spending in new areas of technology, as well as in actual topco spending. And you saw that we did a 4.1%, 60% LTV deal with Rabobank. We publicly disclosed it. The cost of capital broadly has moved and changed across being public versus financing yourself with private bank debt. It has changed a lot. And I think it will continue to change because people are waking up to the fact that this future is required. And there's interest in it because unlike a very expensive Tesla, people need to eat. And we're running out of food. And so I think you're going to see more and more capital It's going to show up in different ways, private, public, bank, equity, and it's going to evolve.
So so Sanjeev mentioned energy transition. I recall it took some time for people to really understand how to do a PPA, how to set up the capital structure and everything. So you've to some degree, you've taught the bankers how to set up the capital structure in this process, or?
Well, I think it's about, take an asset. In my case, I'm building a controlled environment ag asset, a large one. And in the case of many of these other companies, cutting edge processing or genetic IP material around making a lot of the future
Yeah,
of
you're
food.
changing the genetics, you're improving the margins on the unit economics through technology, and then you need a whole bunch of capital to build big.
And that equation, it used to be that there wasn't access to the large amounts of capital. You need a large amount of capital to get unit economics down, I believe. And I wish everyone who is at subscale well, because there's a role to play in this revolution in food, but to really deliver as an at-scale public company, your unit economics, cost of goods sold, gross profit, those are the primary metrics. What you're seeing is that investors are realizing that there is demand and that the unit economics are actually demonstrable. That's what's causing, I think, a lot more capital to come in, both public and private. The difference with energy, it was a little unclear on the demand side, and whether you could get unit economics down fast enough to get the lion's share of the demand. This is a different.
So you don't need a
dynamic in food.
PPA necessarily to justify the 15, 20-year capital payback.
I think whatever your unit of capital is, whether it's a CA facility or a factory or a lab, you need to show that the ROIC is positive and that there's ready demand on the other side of it. And I think that's becoming very apparent today in food, because what's really changed is consumers are demanding better products. I said it before, 10 years ago when I was at Del Monte, there was less capital available for innovation because frankly, the consumer didn't really care as much, either about their health or climate. And I think that's really sped up.
And do you think
capital
the
formation.
capital communities understand that, or can we do something to expand their understanding? And how do we change the first derivative of that?
Well, first, I think it's early days on understanding broadly. And I think that was part of the reason why I posed the question to those who are covering more of the public equity space. It's frothy because the amount of capital is increased faster than the amount of understanding of the system.
So is that dumb money, or?
No, I think it's technology investment. Take any wave of technology change or massive consumer change, capital, once they get interested, flood the opportunity, and then the system sorts its way through.
Yeah.
I don't know where we are in that cycle. If I did, I would have a much bigger impact as being an operator. But
Well, so if we think about this a little bit to the beginning of the day, we have giant macro forces. Population's growing, middle class is growing, demand for protein is growing. As a result, we've got innovations in plant-based meats. That's altering the equation. There are macro forces at play. And we don't have more farmland. There are a lot of reasons not to put more farmland in place, and there's a lot of resistance. So those are barriers, giant barriers that then say, okay, we got to improve productivity. So Benson Hill is, we say, if you improve productivity, you got to bring biology and data into it. And so biology and data, if I'm a tech person, is synbiology. It starts moving that. So synbiology is getting valued at 100x sales. And where are you on sales right now? Where are you on, what's your valuation?
we are earning our way into our valuation.
So if we talk about classic ag, what multiple do we want to put on classic ag? Like 2, 3, 4, 5x sales, if that?
Yeah, I was just gonna say if that.
So you, and then Zymergen goes public and has a bad day valuation. So the frothy valuation. So you're living in a world, Matt, of at one point you're buying a soy production and trying to bring it online, and people are wondering about how many acres you have. And the other side, you're on the edge of CRISPR and want to explain to somebody
Right.
that you're going to figure out how to make plant-based proteins operate at 10 gig.
Yeah, I think there's just a fundamental disconnect that resides in this space, where you've got technology investment and you know, I used to be in venture, and you want to look at the shiny genomics object, and you want to invest heavily in technology, and you do it with this thesis, this belief that it's going to materialize and it's going to become a product or great products, and you're going to experience this very efficient mechanism in which you get to market, et cetera. And in pharma, traditional life sciences, that's a pretty well thought through approach. If you develop a better mousetrap, you've got a lot of optionality to move that into a space where it becomes monetizable. It's a well understood asset. I think innovation in food and for the food system is a more, it is delinked from the consumer side of the equation, and that's where the capital intensity that David and others describes come into play. It's not enough, it's really not, to invest in great technology. I mean, I get asked this question in investor calls and in meetings every single day. I understand what you have. You have 150 people dedicated to this convergence of data science and plant science and food science. I've diligenced your proprietary CRISPR platform. I've diligenced, you know, what you're doing from an AI perspective. Why in the world do you need to go produce food? Why would you do that? And you know, what we've begun to, I think, get across to the market is that it's not enough to just have that innovation. You've got to create a channel. It's not that we haven't spoken with all of the ag integrators, with CPGs. I tell this story sometimes. We had one of the CPGs 4 years ago came into our office in St. Louis, and they wanted to get educated about CRISPR and genome editing. And we spent 3.5 hours on like a teach-in about what is CRISPR, how does it work, how are we increasing efficiency, how do we create better products using this technology and data and so forth. And at the end of it, we're sitting there, you know, eager entrepreneurs. How do we partner with you? You know, this is a top 10 CPG company globally. And they all kind of looked at each other and they said, like, this is really cool, but I buy ingredients. I don't buy technology, I buy ingredients. And I won't say it's a lightning bulb moment, but it's a moment, it's a decent example of you've got to meet the customer where they are. And if you go have that conversation with ADM, with Cargill 3 or 4 years ago, which we did, they are more or less saying the same thing. Like, this isn't enough to matter to me. There's not scale here. And what I think we're trying to do at Benson Hill, and I think others are going to I'm going to say emulate, but I think others are paving the way to do this because of the capital availability, because of some of the realizations in this category, because of the demand side, is they're saying, look, I've got to go catalyze the demand side, I've got to go meet the customer, reach the customer, and then when I turn that crank a couple times in an actual production system, then it's an appropriate time to go to the integrators and the downstream folks and collaborate and achieve a greater degree of scale. So you've got to have both. That's just the state of where we are today. And until, you know, there's, I think, a wider recognized decommodization view, more ubiquitous decommodization, you know, being embraced, I think we're going to be there for a while.
Well, dive deeper by what you mean decommodization.
Well, when we go to, we have a conversation with a farmer, and you use words like specialty, and there's almost this like, oh, you know, niche. That's what comes across. We've got to get away from the idea that specialty and value add doesn't equal scale. We can achieve.
And you're talking about specialty in variants of proteins.
And maybe it's the wrong word to use, but yes, I'm talking about differentiated, identity preserved, traceable, however you want to think about it. When we think about that, when we use those words, I think we're trained in this industry to think about a rooftop garden where we get to ship it down to the Whole Foods.
Yeah.
That's what we're trained to think about. That's just not the case. I mean, we planted 70,000 acres of beans this year, right? 70,000 is a lot smaller than the 80-some million acres of beans that are planted in the United States. But let me tell you, 70,000 acres will make a lot of hamburger, right? I mean, that's a lot of tonnage of base protein ingredient, and we're doing it with
Or plant-based.
or plant-based. That's what I mean. And we're doing it in a manner, you know, where you can actually segregate it out, such that you've got maybe it's ultra high and super high and high protein, and you've got different amino acid profiles. So we've got to really think about how you're digitizing the system in order to deliver that.
And by the
then it
system,
becomes
you
just one
mean?
thing. Yeah, and by the way, and Sanjeev does a great job making this point, it's deflationary, right? That's the point that I think gets also lost.
So
in this
then make that
conversation.
point. Why is it deflationary?
Because not just productivity, but you're increasing, I think, you used to have this false choice between productivity and unique sort of technologies or nutrition or flavor claims. I think what Matt has done and is doing effectively and even I would say AppHarvest is you can do both. You can have productivity, health, and flavor all in one.
You can make, using technology, it's as simple as you can make more through superior yields at a competitive or lower price, deflationary, with added value benefits like better health, not in our case, no harsh chemical pesticides. I would say though, you have to have the ability through technology and a great team to execute against that. Like it's not deflationary if it's a premium, precious, subscale, great added value business whose cost of goods sold is twice the market today.
So, but in a sense that people will buy the iPhone 13 or whatever it is, or whatever the next generation, because it has more features and benefits, and that in a sense are internalizing things. So are you seeing that consumers are internalizing the health benefit to change the value, or is it deflationary and a pure price point?
There's two things going on, I think, and they both can marry. One is the consumer today is spending, are spending more of their percentage income on food.
Yeah.
It matters to them, both the identity and the health, and then there's a purpose to what they're doing. That's creating a premium market that is pretty high growth and pretty compelling, and that will continue to grow. If you really want to attack the scale, though, is I think what's happening is most of the market cap in this sector is on commoditization. So they've got EBIT margin on one axis and then revenue by invested capital. And they've got a very traditional commodity ROIC, like mining, oil and gas, any traditional commodity. What I think, what I see companies like Benson and AppHarvest doing is bringing technology, but their unit economics still work in a commodity world, but they're producing a premium product that doesn't have to be sold with a premium. And so both those things are happening. Some of those companies may tap the premium market to get early product market fit, but the scale, how do you have a higher market cap than ADM, or how do you have a higher market cap than Total Produce or whatever, is that eventually that's scaling up of that decommoditization and deflation, is in my view.
So are you finding that as you're talking to everybody, you're talking classic, boring, top tier, just allocators down to Reddit. You were on Reddit groups recently, so you're hitting the waterfront, right? I mean, is there anyone you haven't
Welcome
touched?
to being public, right? I mean, you talk to everybody.
Is there anything you learned in that process that's changed how you? And let me add, so Amazon was in the woods for 15 years, 10 years of their public life. If you think about it, I mean, in 2004 there were reports coming out saying, "Short the hell out of this company."
If they didn't do that convert, they would have been in trouble.
Well, but so so that you don't have to go 15 years ahead, what have you learned in this to try to explain better to help people understand and adopt the valuation that will help you get low-cost capital to grow and take on this problem?
Well,
I that question.
It's interesting. I mean, when you look at the investors that have supported Benson Hill, and you were to go across, 5 of them, sometimes you'd hear 6 different investment theses. So I'd tell you that different people have latched onto different components of what we're doing. Some of them upstream, some of them downstream. The one common denominator in this, and I think it's just becoming more and more understood, is that biology is the one element of this that transcends the entire value chain. It is a very, very proven lever for differentiation. So if we can say, look, I've got the toolkit, the biological and the data toolkit to go back to the seed and use that lever at the very top end of the value chain, I think that message is landing really well with ESG investors, with traditional investors, with commodity investors, with tech investors. That's my perception right now.
Without the drag of anti-GMO.
Yeah, to be frank, we get asked a lot about GMO, non-GMO, et cetera. Everything we produce today is non-GMO butterfly certified. That doesn't mean that we're a non-GMO butterfly certified company. We're a technology company. We're using it to develop that, but we're also using it to diversify into choice.
But investors are educated enough now to respect how biology can be used without getting hung up on, are you GMO?
Yes, I actually think that is happening more in the last 12 to 18 months than I've seen previously.
So we got 6 minutes left, and I said I wanted more questions from the audience. So should I ask you a question, or you ask me a question? Any questions? There's got to be somebody that's got a question here. There we go.
So if biology is the common thread among all of your buckets of capital available to you, how do you get folks comfortable with the fact that technology advancement can only occur at the speed of biology?
Oh, biology. That's a wonderful question.
I ask him all the time.
You read his tweets.
We have this, we have Jason Bull, our Chief Technology Officer.
Where's
here.
Jason?
There he's right in the
Jason.
middle.
So-
Jason is a great person he'll bend your ear on this. But, we have a team of people that have basically taken all the parts of the product development process and tried to break down how do we bend and break, in some cases, the rules of the speed of biology. It's a double-edged sword, right? Because people say, well, look, if Corteva or ADM threw $1 billion at this tomorrow, why can't they just beat you? And that is my answer. Well, we've got a 6 to 10 year head start. I like to say,
Because you're better.
And my non-technology term, I say you can't cook a turkey at 10,000 degrees in 3 minutes. But when you think about biology and you think about the constraints of what we do, we can utilize a lot of the enabling tech. So sensors and systems and monitors, and we have a crop accelerator coming online where we'll be able to push 4+ cycles per year. That is pretty remarkable. I mean, we have tissue culture-based approaches and other methods that we, in some ways, kind of parallel process in order to move as absolutely quickly as we can. And we've shown that we can take a majority, I should be careful, a majority of the traditional time out of what would be an even accelerated product development process. But with the advent of where I think some of the more game-changing approaches will be online in the next 3 to 6 years will be really along CRISPR. I think you cannot yet appreciate the power of what CRISPR technology is doing. It's in our pipeline right now. We don't talk a tremendous amount about it. We will in the future, but it's a convergence of that tech with traditional breeding approaches, all informed by data, which is really the currency of all of this, that is accelerating. And to your point, you've got to think not just about the crop. The biology transcends into the ingredient, and understanding the phenotype of that ingredient and being able to build it back preemptively. It's breaking the rules of what the system's currently enabled to do. And so I can't accelerate reproductive biology, but I think we're bending every component of it.
So does that,
Yeah, it's going to.
I don't know if I can ask this question simply. So my interpretation of what we discussed here is we're talking about decommodization. And the decommodization, I might say, is also about verticalization. So Impossible, serving soccer dads and soccer moms, will want to make sure the labels say certain things, and they will ask their suppliers to tell them that their products are meeting those things. And they'll think about version 1, 2, 3, 4, 5 of Impossible. So verticalization, the interconnectedness of that, and that farmers will be contract manufacturing to supply your beans to
But can I just
Impossible.
offer one? I think sometimes when people think about synbio, they're thinking about, as you say, the limits of biology to create novel things, novel seed, novel. I think that's a small part of synbio. Synbio is also, as we did in Impossible, creating a new method of manufacture that is resident in the cell, for which I would say we are so early on the potential of that technology. And if you want to
That's
look
sort
at
of the food ingredients, food science level.
right, so it doesn't have to be just a narrow novel seed in this vertical. The promise of the technology, I mean, he's not talking about it because he's focused, but the promise of synbio is actually the very method by which we make lots of things, including food. And Impossible Foods not talked about this, but basically we're one of the first to use synbio to create heme, a small molecule of interest at massive scale very cheaply. And I think that potential is vast, and we're very early on in realizing it.
I think more focused on the food system colonizing the healthcare system, more digitalization of the channel with e-grocery, and all this, whether you're Walmart or Amazon or General Mills or Kellogg, or their search for differentiation, you're going to end up back at how do I have differentiated ingredients, differentiated products that I can put on the label to claim less sugar or more health benefits, et cetera. So I think there's a bunch of confluence of factors that are driving this search for differentiation, and I think it's going to lead to a much more biodiverse, flavorful, healthy system. But the key to scaling that's a speedboat. If you want to change the tanker ship, you've got to also meet them at the price signal that they can afford at their grocery store.
I was going to say, this affordability component is a massive entry point, right? I mean, we've begun to see the
Better, cheaper.
Well, right, exactly. You've got to. I mean, that is your entry point.
That's,
right?
I mean, that is the innovation cycle of Silicon Valley. Better, cheaper.
And you see, everybody is fixated on, and rightfully, I think, and you put it up there in your opening comments, getting not just to meet parity, but getting beyond that.
Yeah.
We believe at Benson Hill that you cannot get there, not scalably, not sustainably, not profitably for all the key players today at the margins without ingredient innovation. You just can't.
And we will leave it at that. So the thing I'd like everybody to think about is there's a little bit of method to our madness here, and a lot of what we've learned through the Benson investment early on has also led to both S2G's and our investments across the value chain. We've got 15 companies here today that I think relate to this verticalization. The data and the other systems in place to bring ingredients together to drive affordability. And so the rest of the afternoon is set up that way. And the objective here is to get a better picture for all of you and to feed it back to us is do you also see that verticalization? Because the more that we can explain that sooner to the marketplace, the better we can help capital markets allocate properly. And to your point, energy sucked in $4 trillion from 04, 08?
04 to 020.
04, and so the question is how can we pull that together? Complex problem. We're on the front part of it, but we want to accelerate it based on what we've learned. So I apologize we didn't get more questions. Paul wants to